Hello and welcome back. In today's video, we're going to be taking a look at the Vanguard MSCI Index International Shares ETF, also known by its ticker symbol VGS. We're going to be taking a look at the underlying holdings, key facts about its fees, dividends, tax, and currency movements, its performance, as well as giving my final thoughts. VGS is one of the most popular international ETFs on the ASX. Unlike IVV, that only tracks the S&P 500, VGS is quite a bit more diversified, covering many developed nations. I have talked about the ASX 200 index ETFs in a previous video, and in many ways, VGS is a very well-suited companion to the aforementioned ASX 200 ETFs. So much so that many investors will simply choose VGS and an ASX 200 ETF like VAS as their entire portfolio. The reason for this I will get to momentarily. First, I just want to say that if you do find this video useful, to please leave a like. It is perhaps one of the easiest and most effective ways to help support the channel, and it only takes a few seconds of your time. But with that said, let's take a look at some of the factors that make this such a popular ETF choice for many investors out there. First and foremost, VGS is a very diverse ETF. It tracks an index known as the MSCI World ex-Australia Index. As alluded to earlier, this makes it a great companion ETF if you are already invested in Australia, as it avoids overlap. The holdings are comprised of large cap companies from around 20 developed nations, including the United States, Germany, Japan, and the United Kingdom. I do want to point out that while this is an international ETF, the United States does have an oversized influence in this index. And the reason for this is quite simple. The United States stock market and economy is absolutely huge, and it is by and large the largest economy in the world and dwarfs anybody that's not named China. Companies like Microsoft, Google, Amazon, etc. are trillion-dollar plus market cap companies and are just really overwhelming in their scope and have a footprint in most countries. So while they are listed as US companies, they are truly sort of international in scope. But with that said, though, from the sort of aforementioned countries, you have around 1,500 or more overall holdings within this ETF. So you get a staggering degree of diversification. And given this, most sectors are pretty well represented. Tech is still the dominant sector, but it's not nearly to the same extent as the S&P 500 ETFs like IVV, and certainly not as represented as the NASDAQ 100 ETFs like NDQ. Sectors like financials, consumer discretionary, and healthcare, and even industrials are pretty well represented. And looking at the top 10, we do see the usual suspects. We do see your Amazon, your Apple, Google, and all that sort of thing. And they do definitely star at the top of this list. But again, it's not to the same extent as some of the more popular ETFs out there. And it is kind of tempered with a lot of other holdings. And it's not sort of this overarching dominance where one holding's like 15% of the entire ETF or something like that. And you do have other non-tech companies like JP Morgan, Johnson & Johnson, and Home Depot, which also do make an appearance in the top 10. So it does sort of temper that tech dominance a little bit, and you're not going to see sort of an overwhelming influence of tech. But now that you have some idea as to the extent of diversification of this ETF, we will now look at some of the more practical aspects. What are the costs, currency concerns, tax, dividends, and perhaps most importantly all, how does this all perform? You may think that investing in over 1,500 companies worldwide would be an expensive venture. However, VGS accomplishes this at an extremely reasonable fee of 0.18%. This makes it one of the cheaper ways to gain international exposure on the ASX. It is also important to note that given Vanguard's scale and reputation, there is always the possibility of fees decreasing further. On the subject of scale, this ETF boasts funds under management of over $3 billion. This means that it is extremely unlikely that the ETF is ever going to get closed down like some of the smaller niche ETFs that sort of pop up from time to time that might have $5 or $10 million of assets under management then dissolved a few years later. This is here to stay and is one of the very sort of sure bet stable ETFs you're going to find. I mean, Vanguard's pretty rock solid, and it would take something absolutely cataclysmic for this ETF to be closed down. And while it is not dividend heavy, it nevertheless does pay one quarterly, and dividends are eligible for a full dividend reinvestment plan. And this is facilitated through a share registry, and for Vanguard the registry you use is Computershare, and you can opt in to reinvest your dividends through them. And for tax purposes, it is important to note that VGS is domiciled within Australia, so you don't need to worry about doing a W8BEN form, which will make things a little bit simpler. You don't have to sort of do that reporting to the IRS. Also, of important note too, this ETF is not currency hedged. That means that as the Australian dollar rises or falls, this can influence the performance of the ETF. If the Australian dollar were to decline in value, it would mean your holdings, your ETF value would go up. If the Australian dollar were to strengthen, it would mean that your ETF value would go down because it's based mostly in international assets. Of note, there is actually a sister ETF to this one called VGS, which is essentially the same thing but currency hedged. It commands a slightly higher fee and has slightly less assets under management, but basically it does the opposite. When the Australian dollar goes up, it'll go up more than VGS. If the Australian dollar goes down, it'll decrease more than VGS. It's something to consider if currency concerns are important to you, but that's obviously an individual sort of choice there. And speaking of performance, the performance for VGS has been quite stellar. Over the past year, it has gained 20.49%, and since its inception in 2014 has gained 13% roughly. And this is above average. The market average for sort of a very diversified ETF is in the realm of sort of 9-10% over a long period of time. VGS hasn't been around all that long, existing 6.5 years so far, but so far it has performed quite well. It is of note the past year though, we have had very exceptional returns, and this is not sort of a typical investing environment we're in. So of course take it for what it's worth, and realize that we can go through periods of little to no growth that may bring us back down towards the average. But with that said, let's move along to my final thoughts. Overall, VGS is a very easy and relatively cost-effective way to build the international component of an investment portfolio. It is diversified enough to be useful in a wide range of circumstances. With this said, it is not an all-in-one ETF like VDHG, which actually contains VGS as an underlying holding. It is a great foundational holding to build around. Just by adding something like VAS and or VGE, one can build up quite a diverse range of holdings with a minimum of cost. This is suitable or may be suited for people who want to invest but do not want to necessarily overthink the process and labor over certain sectors. For people that want to have 2, 3, or 4 ETFs and just build those core holdings up in dollar cost averaging over time, it may be suitable for that. And to that end, the FIRE community in Australia, the Financial Independence Retire Early community, actually favors ETFs like this. They're people that more or less invest a lot of money, a high savings rate, but don't necessarily want to overthink, specific stocks or whatever. They just want to build up the asset base. And for something like that, VGS is definitely part of that sort of aim and strategy. And I can see why it's so popular for that. And of course, it's not going to be suitable for everyone. Your individual circumstances and financial situation will dictate how much VGS, if any, is appropriate. I personally don't use VGS at this current point in time, but if I did want to simplify down, and I probably will in later years, I would definitely, at least for me personally, opt for VGS and perhaps 1 or 2 other satellite holdings around it. But those are just my thoughts anyway. Let me know what you think. Do you invest in VGS? How is it part of your investment portfolio and your overarching strategy? Let me know down in the comments below. And as always, if you did like the video, feel free to drop it a like and subscribe. If you have any suggestions for how I can improve, maybe you didn't like the way I talk, maybe you didn't like the video, feel free to give criticism as well. I'm all about trying to improve. But with all that said, I'm just going to leave it here and say my name is Rich, and I will catch you guys in the next one.